Hello, everyone. Welcome back to the Mike Rosehart Show. We're live again for another episode. Just got a new notification. That's kind of cool about a new chat. It's kind of cool. Okay, we're back again. And what are we talking about today? We had inflation come out. It's a little bit higher than expected, which is like as expected. What's interesting is you look at inflation and all the things that are down and the things we don't care about, like airfare and how often do you buy a car? But your rent, your food, everything, like you spend 2/3 of your budget on. The average person spends 2/3 of the money that they make on. I mean, that's screwed. Like that's like 10% inflation in the last 2 years, more than. So it's a problem. My voice is a little bit sore tonight. I'm not feeling so great. The kids all went back to school this week, so it was back to school in the last 7 days or so, and in the first 10 days when kids go back to school, you always get sick. That's just the nature of it. And you guys know we homeschooled, but this year we're trying out something, a really great Catholic school that's like, uniform and fantastic. And we're going to give it a shot for a semester, see if our kids like it. 2 of my kids are in school now, so we're giving them a shot. And it's freeing up a little bit of my time during the day, but it comes with its struggles, and we have to be actively involved. And so there's, I would say it's more work for us to send our kids to school, with all the prep we have to do before and after. And that's not true. It's probably about the same amount of work. But the quality of education, I don't know. We're still analyzing that, whether there's net benefit there for them. We may do a semester. Probably what we'll do is a semester now where they go to school, and then a semester where we do homeschooling. And so we'll have best of both worlds. And so that'll probably be the way that we handle it. Yeah, so that's what's out of my world. What else has been going on? Trying to sell some properties off right now. I gotta rebalance my portfolio again. I'm trying to get rid of all my small deals and trying to buy a lot of big deals. So I'm gonna shift and make a change in the way I've been doing things. So I'm gonna slow down my flipping division. We're gonna do a lot less flips. We're doing almost a flip a month. And I'm like, you know what? I'm gonna slow that down. We're doing actually more than a flip a month on average. But I'm trying to slow that down. And I'm gonna focus all of my attention and my resources towards building a multifamily portfolio. I wanna build an Airbnb property management company for my specific units as well. So those are some focuses right now, is trying to find a good running mate for that, someone I can get into to help systematize that business as it grows to probably 1,000 units. And I just figure, and I spent some deep hours late at night, like sitting in my room thinking, and I'm like, you know what? To me, the place where my money feels safest is in assets I can control. And trading just doesn't do it for me. Though I've had 2 amazing trading days. I went, yesterday I went short and it was great. And today I went long, and it's like, it's awesome when shit's working. But like, I'm still glued to it. I'm checking it every hour, right? And that's what happens when you're swing trading and when you're, day trading, and when you're, anyway, making trades you shouldn't be doing. So don't do that, is the moral of the story. Stock trading is not even if you're good at it, which over a 30-year period, no one's good at it. Like the smartest guy, you're competing against the smartest people in the world. And I'll tell you, 99% of traders won't win over a long period of time. So pick good investments, hold them for long periods of time. For me, that's mostly real estate. I just, like, when I invest in myself and my own businesses, I feel way better than when, and I perform better than, like, let's say I buy Tesla right now. Like, Tesla's like almost $1 trillion company. Will Tesla be worth $2 trillion probably in 7 years? Probably. Probably in 10 years, it'll double. But the challenge is that, it just, if I put that same capital on myself, I could probably 10x that money. I could do 1,000% growth instead of 100% growth. So there's just, it's hard. And then the chance of loss. Like, what if Tesla goes to 500 million market cap again? It just was there not long ago, in a number of months. So could it go from $1 trillion, or what is it, 800, 900 million, billion? Could it go down to half that? Yeah, that volatility is there. In my own business and real estate, I don't feel it in the same way. So for me, I'm going to shift my assets and shift my attention, shift my focus away from managing my portfolio, more towards building a real estate business. Just because I feel like if I give 1,000 units, I never need to worry again. Like, that would be just such a boss portfolio. 1,000 units of real estate. I don't know what the average cost per unit will be. It depends on which area we're investing in. Some areas it's $200,000 a unit. Some areas it's, $100,000 a unit. Some areas it's $400,000 a unit for some duplexes in good areas, right? We're gonna try to shift away from those assets. I don't want to be acquiring those kinds of assets, but yeah, something to think about, I guess. For me, it's just been like, where do I have the best chance of success and the lowest chance of loss? Where's my risk adjusted return the best? And it's in real estate for me. So that's the shift. Anyway, today's all about real estate Q&A. So any questions you guys have, throw them in. Hey, a super chat. Celebrate the first super sticker from Ethan G. Love the vids, Mike. Thank you, Ethan. Appreciate that. It's great that we have this new super chat function. There's some new chat functions too, just in general on YouTube, and there's some memberships you can join and stuff too. I just got like a notification about it, and I haven't read into it at all, but it looks kind of cool. Chuck Norris, how you doing? This is, can you contact the lender directly through RateSpy? Why use a mortgage broker? So Chuck, RateSpy, it advertises for mortgage brokers. So yeah, I mean, there's lots of mortgage brokers on there. Could you go direct? You most certainly could, for sure. The challenge is a lot of those teaser rates that you see on a site like RateSpy are not available for refinances or conventional. They might be only 5% down mortgages. So just inquire into it. It does not hurt. I've used RateSpy several times now. Submit it to the lender and been like, look, do better. Sharpen your pencil. Like TD, Bank of Montreal, Scotia. You go to them and say, hey, look, this is what I can get elsewhere. Do better. And they come back and they're like, okay, we dropped your rate from like 6 to like 5.5. And like, they'll actually do that. Like that's actually a thing. What's crazy to me is how few people negotiate. Like there's a lot of people out there who just take things at face value. The lender says 6%. They're like, okay, it's 6%. The lender said it's 6%. I'm not going to try anywhere else. I'm not going to try and fight it. Or like they got an insurance quote. And they're like, this is the price. And it's like, they just pay it. It's crazy how many people do that. And so on one side, from a business mentality, I'm like, geez, I need a business where people don't question things. Like when you post a unit for rent, most people don't negotiate. They just take it if they like it. If they like what they see, they just rent it. Very few people negotiate in life because there's friction. People don't want friction. A lot of people don't like friction. I was born in a hard environment where I had to fight for everything that I have. And so I love friction. Everything is like, why? Because I don't always think that people have the best interest at heart for you. And they don't, by the way. People don't have your best interest at heart. So you've got to have your own best interest at heart. All right. So yeah, I guess that answers that question fairly well. You can contact the lenders directly. There are links and articles right on there. But going through a broker is nice because they can shop multiple rates at once. And sometimes it doesn't cost you any more money. Depends on the lender. Grinder says, hi Mike, would you get life insurance in your 20s? Any recommendations? If so, thank you. Well, I did get life insurance in my 20s. So be that what it will, I did do that. Doesn't mean it was the best choice of action. I think that insurance for most people is a losing proposition. Like 99% of people will lose investing in insurance. You're better off going to the roulette table for most people. Even with the whole life products they have, most people are better off just if they need insurance, go buy term insurance and then invest the difference in real estate or in, some sort of growth fund over 25 to 50 years. And even net of capital gains tax, which maxes out at 26% is the max capital gains tax rate, right? Because half your capital gain is tax-free. So a lot of these advisors will plug in like, you're paying 55% tax. It's like, who's paying 55% tax on their capital gains? Like no one. That's not true. So make sure you analyze the numbers carefully because a lot of these agents are biased to sell the policies. And so I'll say insurance can be a good investment if you're in the top tax bracket when compared to things like lending or interest income in a GIC. I mean, it outperforms those other shitty investments like GICs for sure, no doubt. And it is a low risk investment, meaning like the chance of the insurance company going bankrupt is very low. That is the risk, right? You're investing in that company effectively. So there's challenges there, but your probability of dying is, unless you know something I don't, like if you smoke and like do a bunch of risky behaviors, I mean, you may die early, so insurance might be a good ROI. But over the lifetime, especially like whole life, cash vehicle insurance policies for the most part don't make sense. For me, it's like at some point I'm probably going to leave to a tax-free or near tax-free destination like the Bahamas, where taxes are not a huge deal because you pay a 1% tax. So then when you run the fees of these insurance policies against the cost of, so you run basically it's like the cost of the insurance, which is like the first year's premiums upfront gone, against the gains. That's where it's not so great. Now, if you look at your own life insurance license and you write your own policy under the company that you work for, you get often your first year's premiums back as a bonus check when you're a brand new agent. And in those cases, if you're working with a broker who will give you back a commission as the agent who wrote your own policy for 1 year's insurance premiums, that's where the loss happens, right? In year one, your return is actually minus 100%. All of the money you put into your whole life policy, your cash universal life policies, it all goes to fees. So if you can get those fees back in year one and write your own policy, that has good ROI over a 50-year period, net of tax, for sure. But the fees have to be more than the tax drag, and it's like, in many cases, it isn't. So, something to think about, guys. Interesting fact, though, while I'm thinking about taxes, someone was talking to me about this today, about having kids in Canada. And the Trudeau government has put into place the Canada Child Benefit, which gives you, like, if you can keep your income less than $30,000 personally, you could have $1 million in your corporation. But if you personally have $30,000 or less in income, you can qualify for, I think it's, I want to say $600 a child, cash, tax-free, per child. So we're talking about, if you have 4 kids, that's $4,000 a month tax-free, which is the equivalent of making $7,000 a year pre-tax. So you make the same as a lawyer just starting out, or a resident in medical school who just started working as a doctor, more than, in some cases, just by having 4 kids and doing nothing else, just breathing and having 4 kids. So Canada's got some really interesting policies around having kids and children, and immigrants love to come here because they bring their 5 kids here from India and from Syria or wherever they're coming from, and they get so much in free money, and they take more from the system than they contribute in many cases. What we want is rich immigrants to come here and to give more than they take, because if you have a really high income, you don't take from the system, you actually give more to the system than you take. So anyway, just random thought I'm gonna throw out there. If you're looking at like a really lean fire retirement, have some kids. Sorry guys, this cold's kicking my butt. Okay. Good evening, Mike. Bought an old Porsche from Copart Auto Auctions. Huge fun, very reasonable price. Highly recommend if you're looking for a hobby. Hey, there you go. I would love an old Porsche. Someone send me some deals. If you could come across a really cheap, like you get a nice Porsche for like 10 or 15 grand. I have several garages, lots of space for it. I would love to get a hobby car. And if there's a way that I could, in my business could buy it, and there's a way that I could use the business to write it all off and be tax deduction. And that business could use that on social media to grow our following, and you get awareness from people. What you want to hook people in who are into cars, into spending, and then get them to be more frugal over time, get them to increase their income over time. So I would love to cast a wide net and catch people who wouldn't otherwise, think about frugality or think about investing and saving for the future by doing something like that. So it is something that, like, as you get a ton of FU money, you're like, what do I do with all this money? Like, how do I grow and try new things? It's like, that's something that'd be cool to do. Thanks again for the comments, guys. And then Eric says, if you had to start your life over with $100,000 in the bank and a realtor license, within 5 years, turn into $1 million net worth. For sure, it's possible. I mean, I did just that. In a market like we're in right now, where prices are flat or declining, it's harder to do. But I would argue is one of the best starting positions you could be in. It would have sucked to start in 2021, 2022, because now you're like, you would have lost everything if you went hard. If you built an amazing business in 2021, 2022 in real estate, you would have lost all your momentum this year into 2023 and in 2024 as well. So I'll say this is a good starting position. Yeah, if you had 100 grand, you could, there's so many times where, and I see so many deals like this, where I can buy a house right now. There's one on MLS right now I'm thinking of that 300 grand. I can pick it up right now. I'm not going to share it because I'm probably going to buy this one for someone I know. But 350 grand, that's worth 500 when it's done. You go in there and you put the sweat equity in. You're working a job, you're doing whatever, making money, you're a realtor. Pick the job, it doesn't have to be a realtor license. You can pick any job. You're doing the job to make the money. You buy the house, you'll move in the house, your living costs are zero because you're living in the house. You duplex it, so you put an extra unit to rent some bedrooms. Now you start profiting every month. It's covering all your living expenses, and you're putting money aside for the next deal. And while you're there, you renovate it, and you improve it, and you increase the value. And then you sell it, or better yet, you refinance it, and you pull the equity out and you buy another one. So you buy it for 350, you refinance it at 500, you put a mortgage on it for 400, take your original money and 50 grand out, you buy another one, you do the exact same thing, you increase the value on that property, you pull out the money, you do it again. It requires your input of labor. Like, you're gonna have to put in a lot of hours. But is it doable? Hell yeah. Is it doable passively? Like, where you're just, I'm not gonna put in hard weekends and evenings, I'm not gonna put in all the time. No, like, to go from 100 grand to a million, that's a 10x. Over 5 years, you could also be working a job as a realtor and making 100 grand a year. So that's 500 grand pre-tax you're gonna make as well, plus the 100 you're starting with. So there's 600 right there, just from you working your full-time job as a realtor. A lot of realtors, if you hustle, you can make 100 grand a year. Not that hard. Go to meetups, start networking, start talking to people, do a good job for people, polish up, and you will make 100 grand a year as a realtor in your second, third, and fourth year. Unless you're just not cut out for it and you don't like talking to people, and in which case maybe find a new profession. But anyone who's decently disposed predisposed to do a role like being a realtor in sales, definitely good pay. Sorry, guys. Oh, my throat is killing me. I gotta keep the stream short tonight. But it is a real estate Q&A, so any questions you have, throw them in now or forever hold your peace. Chunk says, is it better to buy windows and have them installed by a contractor versus a door and window company? So I've always used buying discount windows I go on Marketplace, and there's so many windows on there. I bought one for our pool house we're putting in. It was like a $2,000 window for like $150. I bought another window that was like a $500 window for $75, and they delivered it to me. I was like, hey, they're like, oh, I ordered the wrong size. Oh, our contractor had an extra window left over. And so people just throw these windows up, and so you can get brand new windows, never installed, for super good deals. So go on there and get them. Some of them have the stickers on them still, so they qualify for the rebates and all that. And then I just pay a contractor, or in a lot of cases, I've installed my own windows because they're so easy. Like, you literally have a rough stud opening, you put it in, you get some shims, you shim it to level both ways, make sure it's level, you put a screw in it, then you foam it, you're done. Cut the excess foam, put some trim on it, it's done. Like, windows are not that hard to install, but you can get a guy for $25 an hour to do that, and he could probably install 5 windows in a day. So 5 windows installed at $25 an hour, an 8-hour day. We're talking like $200 in labor. So what is that per window? Do the math on that, guys. Someone who's sharp and quick, it's like around $40, right? All said and done in labor to install a window. A window and door company will probably charge you $300 to $500 in labor a window. And then the markup on the windows themselves is substantial. There have been a few times where I used a window company to install windows, and there was a time when energy audit programs here in Ontario were juicy. And you could, there were companies that could get rebates of like $500 a window opening. And then I would get the company to go do this audit for you. And I had this guy, he was a window door installer, and I gave him like 20 properties, more than 20. I think we did like 30 properties at once. We did all the windows on 30 properties. And it worked out that he gave me a deal that basically the rebates covered the price of the window install. So that's the only time I've ever used a company, was because the rebates were so juicy that it was all covered under the program. So yeah, for me, 100%, I would just get a contractor to do it. The programs aren't that good right now that I know of. Maybe I'm wrong. Maybe there's a new energy audit program out that is awesome. Got screwed by an HVAC contractor for around $10K and have receipts to prove. We're suing or take the L. Do you have a contract? Very hard to win in small claims court. So I've always just let it go, but you do you. I mean, you could sue and you may get something in a small claims court. There's a famous saying. There's a couple famous sayings that pair together nicely, but the one that I like the most, first one talks about people being scumbags and scum, being scum. The second one is you can't get blood from a stone. And so scum's gonna do what scum's gonna do. They're gonna rip you off, they're gonna whatever, and like karma's gonna get them down the road. But the second piece is like, if they don't have anything, the reason they're probably doing what they're doing is because they don't have any money. They can't pay you back because they've blown it on whatever, bad spending habits. It's very common in the trades. I know lots of trades guys make 100 grand a year and have nothing. They make 100 grand a year for 10 years. They should have $1 million in earned income. If they even put 30% of it away, they'd have $300,000 invested over 10 years, probably have $700,000 in an investment account, and they save nothing. That is the trades. Most of them are actually racked out to the max, where they're doing smoking, drinking, spending all their money, and they invest nothing, very little. So that's very common in the trades. Person's probably going through a rough time, give them the benefit of the doubt. I'd probably just let it go and focus on making $10,000 elsewhere. Unless your time is not that valuable, right? Like, if your time is really valuable, you don't squabble over peanuts. You go and you make bills, right? Like, you make money elsewhere. the time to fight in court, the mind share, the time you're going to spend thinking about that trial, preparing for the trial, going to the trial. I mean, and maybe you get a judgment. Maybe they agree they owe you $10,000 or $5,000 or whatever the judge gives you a judgment for. Now, good luck collecting on that, right? If they're not employed anywhere and they're just working for themselves for jobs on the side, good luck garnishing any wage. There's no wage to garnish, right? And so a lot of times you can't even collect when you get a judgment. So it doesn't even matter. They can bankrupt their way out of it too. If they're a bum, they can go bankrupt, start again. A lot of guys do that too. So yeah, that is what it is. But do you have any tips for estimating the highest offer on a property? I've heard that sometimes the seller's agent will give a ballpark number on what the top offer is. What you're asking is a crystal ball, right? There's no way to know what the top offer is. Legally speaking, in a blind auction for property, like every multiple offer situation here in Ontario currently requires a blind auction. So the agent who's the seller's side, right? They can't even tell if they have an offer. They can't even tell their client what the prices are. That's against the law. It happens in the industry quite often. Feel people out, and the agent's like, oh, I'll go $1,000 more and you probably have the deal. Like that kind of shit happens all the time. And that's, again, why I love real estate in part, is because it's not efficient at all. It's inefficient, arbitrageable, it's human. And there's so much error there. Whereas like in the stock world, it's perfect. And the computers will arbitrage the shit out of any bit of irrationality will get solved for in a lot of ways, right? I mean, there's market swings and stuff, but again, hard to predict that. There are very few models for a 25-year period that can prove themselves. But in real estate, you have a human element. So if you have a kick-ass negotiator sales guy, he can keep winning again and again and again on every single agent he goes up against, right? So anyway, real estate for me all the way. But anyway, that question about knowing the best offer, no. There used to be a clause called the silver bullet clause you could put inside your offers. Most of the brokerages and most of the boards, local realtor boards, have banned it. But the silver bullet clause was like, I offer $1 on this property. You put $1 for the purchase price, and you write in this clause and say, hey, my offer automatically escalates to beat the next bona fide offer if written proof is confirmed of this said offer, and I'll beat it by $500, up to a maximum of, say, whatever your maximum price is, like $500,000. And it will automatically jump your offer until you beat all the other offers by $500. And so that people were doing that, and they were just like, they would stop out at their max. They would, if you wanted to win no matter what, that's what you did without overpaying, because the offer would automatically, it was legal. You could legally have the offer jump to the highest bona fide offer that was there. The problem was a lot of scumbag agents were going in their friend Joe, who's a realtor, to submit an offer, conditional, because he just back out after because it's a conditional offer, for like a higher price to boost the sale prices even higher. So these silver bullet clauses were super dangerous because people are messing up with these offers. And you technically have to give to the lawyer proof that the other offer existed to jump this offer to $500 more than the second best offer. So silver bullet clause was super cool if you wanted to win a property no matter what and you didn't want to overpay for it. Instead of going in at $500, you might go in at $1 and maybe it ends up being $405,000, $500, and you win. Instead of going at $500 your maximum, you didn't have to pay as much. And a lot of agents don't like it. A lot of agents say, hey, we won't even accept an offer like that. We're not going to review an offer like that. Technically, it's legal. You could do it there was a private sale thing going on. You could put that in there if you wanted the property enough, and you'd win every time, right? The problem is when multiple agents were doing the silver bullet clause, it would just go into the maximum. So it got really dangerous, and they pretty much banned it. But there is ways like that clause which can work. And often what you'll do is request that the seller agent not be the one to review it. You'll say, hey, can your broker be the one that gets all the offers in? And your broker, or a third, like an independent, third party, or a lawyer, the lawyer for the seller can look at it too. And they'll review and they'll escalate the clause automatically. But a lot of the lawyers didn't understand it either. I once had a silver bullet clause submitted in one of my offers, and they chose another offer. And I'm like, did the lawyer not read the clauses? He's like, oh, he just saw the sale price was lower and picked the best one. It's like, well, now I got to sue their lawyer because their lawyer didn't read the contracts. And so anyway, I didn't end up suing anything, but like, there are definitely ways and strategies to win. To predict price, there is no way to know what other random parties are thinking in their head. They're all looking at different information, comparables, whatever, to make their decision. You have the same information available to you. There is no way to know what someone else is thinking. Yeah, the higher you go, the higher your probability of winning. It's all a game, guys. It's all a game. Joseph says, hey, Mike, just wanted to say your positivity, kindness, and honesty are things that are rare to see in many of the people these days. Thank you, Joseph. Appreciate that. Joseph says, I appreciate that you still upload those same traits uphold those same traits during bad times as well. Many trust you and find you inspiring, and hope to continue to never change and be the best that you can be. Thank you so much. Appreciate that comment. It means a lot when you guys give me this kind of heartwarming types of comments. And that content helps motivate my content to be the best that it can be and to not give up on you guys. And even when there's low viewership and like my channel subscribers have not grown in a year. Like we lose more subscribers than we gain, I think. A lot of the people that came to my channel initially for the frugality stuff, they see how much, I'm spending now or how much I don't talk about frugality as much as I did before. Like where I was like, it's all relative, right? Like if I make $1 million a year, then $100,000 a year in spending is still 10% of my income. That's extremely frugal. But I don't seem frugal because now I'm at a different level, right? And so maybe I don't align with the values of the audience that I had when I was eating beans out of a can for the videos for clicks, right? And I don't make any videos for YouTube, so YouTube doesn't like that. They don't like that I just do a live stream, that's it. But we keep going. I haven't given up yet. Jacob says, hey Mike, love watching your show. Thanks so much. Bull says, over the past year, I've asked you a few questions which you have promptly answered. Thank you. You're a great resource to us all. Thanks so much, guys. This is the kind of compensation that I need to keep this going, because hell knows, everyone knows that I don't make anything on this channel. I actually lose money. Like on this $1.69 super chat, I think 50% goes to YouTube. So like I get like 80 cents of that. It's awesome, like 80 cents. I'm not gonna complain over 80 cents. It's free. But and every dollar counts, right? Everything keeps the channel going. But for sure, my dollars per hour are like, this is probably one of the lowest value things I do per hour. Dollars per hour. That's not true. Like I look after my kids. And like, how do you put a value on that? But like wiping my kid's ass, as an example, is probably not a high value activity. It's probably like a $15 an hour activity. Part of being a dad, but for the most part, in terms of business activities that I do, I guess that you could argue that someday this channel might actually produce something where I can raise capital for those 1,000 units. There might be someone out there who's been watching for 7 years and is like, shit, Mike's been consistent every week when he had COVID, when his kid was born, when it was Christmas. He was always here every week. That shit's like respect, and I gotta invest with that, right? So like part of me keeps it going for those reasons is like someday there's someone watching that has $5 million sitting on the sidelines or is still growing their portfolio and will have $5 million and is gonna give me a call and be like, Mike, let's do some shit together. Like I wanna just retire and park my shit with you. So there might be a payoff someday. But a lot of business in general is just about continuing on in the face of seeing no return. Like I see nothing from YouTube, but I keep doing it. I don't get any monetary reward for like 7 years. It's like still doing it. And social media in general, right? Like there's not a huge payoff, but I keep going because someday there'll be a day where there is a payoff. And that's what separates the successful from the failures, is the failures just give up. But the successful keep going. They keep pushing. Even if they're not seeing success, they make tweaks and they change and they keep going. Because eventually if you persevere, you never lose unless you quit. And I love that quote. And it's like, right now, it's like my anthem. It's like right on my desktop. It's like, you don't lose until you quit. And so if you never quit, you never lose. You just keep moving forward. Losing is when the game is over. If you're still playing the game, you never lost. So keep playing. Keep playing, guys. Never give in. Don't let anyone get to you. Keep your head strong. Keep your heart strong. Keep your mind strong. And then you keep your wallet strong. Jacob says, do you think Ontario real estate will bottom in 2024? I do. I think January 2024, this winter, is going to be the bottom. We're very close. You can negotiate deals right now that'll be as good as you're going to get in the winter. So get out there, throw out offers, 30% off right now, and you'll get some stuff accepted. 100%. Ramteen says, hey Mike, how's your Airbnb in Florida on 2-story property that you renovated? So actually on that property, we sold it. I didn't really want to sell it. I liked the property. But my partner on it made some convincing arguments, and we're going to use that capital to buy some bigger buildings. So it made a lot of sense. There's a number of other reasons as well why, for liquidity purposes, I needed liquidity as well to focus on paying down debt. Like I've paid down almost all of my debt. I have 7 properties paid off in cash now. I've paid back pretty much all of my high interest debt right now. Anything over like 8% is pretty much paid back right now, except for one flip. That'll be paid back when the flip closes. So it's like, I was in a mindset of like risk reduction, and now I'm getting into a mindset where I want to explode things. And so I guess sort of to kind of answer your question, what happened to it. So we bought it for $329. We sold it for 509. So yeah, we sold it, and it's in a slightly declining market in Florida, but that's a good profit. So we'll take that capital out of there, redeploy it, and make more money with it. So no regrets. We cashed out. Well, as long as we buy something else, it'll be okay. Whenever you sell a property, as long as you buy something better and you take that 500,000, turn it into 600,000 or 700,000, you're better off than if you kept the property. So as long as you redeploy that capital, you're in a good situation. But we do still have some property in Florida. We may have a 16 unit property on the beach, which we will be acquiring hopefully very soon. So stay tuned. I can't solicit for a deal because I don't get in trouble. I'll just leave it at that. I don't want to have a regulator call me and be like, what are you doing raising capital? Because technically, you have to be very careful. A lot of people break rules and laws about raising capital in real estate, and I want to stay on side. So if anyone ever wants to invest in general with me or lend with me and make a really consistent return, they want to secure it against the property, I'm happy to have those conversations where you can get I can set up risk-free 8%, or you can take a lot of risk and secure on a second on a property. I don't have any of those opportunities right now, but they exist in real estate where you can make more than 10% for sure. But right now I have no desire for any of the high interest stuff. So don't call me if you want to invest and make 14%, take a lot of risk. Take risk with someone else. I'm doing the less risky stuff right now. So Harriet says, do you have any hard rules for the minimum ROI you need in order to want a deal? How do you figure out the max amount you can offer? Sorry, guys. I'm getting killed here. I'm losing my voice. So the most you can pay for a property should be 80-90% of what it's worth. And we determine that is by looking at comparable analysis, looking at other sales in the area based on income and based on the sale price of those properties per square foot. You could make the two properties apples to apples and making adjustments, and then you have the value of the building, right? By comparing to other buildings that have sold, they're the same. And if those buildings are different, if one has a garage, one doesn't, one has an extra unit, one doesn't, you get it to a per unit price, per square foot price, and you can make adjustments for making it apples to apples comparison. So that's how you get value to determine the value. Second part of your question was, find the comment, there it is. Minimum ROI. So it just depends, right? You might get a 30% ROI on paper in a shitty area. That's not the same as a 15% ROI in an A+ mint area. They're different. They're not the same. So when you adjust for risk, you're looking at a risk-adjusted return. Property in primo locations should be risk-adjusted, and there's less risk. There'll always be demand, even in a recession, for quality property or in good areas. The dirt the buildings are under, right? So from real estate perspective, I'm all about risk-adjusted return. So a C-class asset is totally different than an A-class asset. But if it's a B-class asset, I look for 25% ROI per year minimum is what I like to look for on my deals. So I can't get 25% ROI in the stock market compounded. I just can't do it. The best in the world, like Warren Buffett's, do 12, 13% compounded on a balanced portfolio over a long period of time, right? It's very hard, unless you're in a really big bull market, to outperform that over a long period of time. So that should be your benchmark, is outperformance. Thanks again for all the likes. We got a few people hitting the like button. Appreciate it. It means a lot when you come on, you watch this, you share it. If you got some value, it helps. It all helps. So thank you guys. We will definitely see you next week because I'm live every Wednesday, 7 to 8 p.m. Eastern Standard Time. Remember, the secret to unlocking wealth through you is, here's the equation for building and sustaining wealth. Spend less than you earn. Earn more than you're earning now, and maximize the returns on that difference. Invest that so it can grow. If you have $100 to invest, it doesn't matter what you invest in, because again, $100 times 1,000% is still not that much money. But if you have a huge portfolio of capital, what you invest in is really important. So in the beginning of your journey, it's all about spending less and earning more, finding strategies to make money, just deploy all that time into earning, growing your skill sets and earning income, spending a lot less time spending money. And of course, dump all of the difference between what you're earning, what you're spending, dump all that difference into an investment account, and it will grow what you're earning. So then the gap gets bigger. And as you make more money, don't spend more money. Within reason. You can spend the same percentage. So if you make $100,000 a year, you're spending $10,000 a year, you make $1 million a year, you can spend $100,000 a year, no problem. That ratio holds, right?
The 50-50 ratio is the minimum, I would say. The minimum. Make 100 grand a year, you should be spending no more than 50 grand a year. 50 of it should be going into your investment account. That's my advice. I've lived by that at a minimum at all times in my life. Even in retirement, I still live by that philosophy of at least 50% into a savings account. When I'm really aggressive, I'll take 80% of what I'm earning and put it in an investment account. And I'll live on 10 to 20% of what I'm making. If you're not making enough, work harder, improve your skills, and you'll make more. And then if you can sustain that period of pain where you're working way too hard to make extra money, eventually you'll build up a savings pool. And that savings pool starts covering your expenses, creates passive income. Guess what? Then everything you earn is just all pure to savings because your expenses are covered by the passive income from your nest egg. So it actually works to get easier and easier as the snowball falls down the hill. It's hard to push it up, but the second part where it starts rolling down is just money. So that's my advice for you guys today. And as always, you know where to find me at Mike Rosehart on Instagram and on Facebook. It's a blue check mark, so don't go follow the frauds. Follow the real deal. Follow the actual Mike Rosehart. Anyway, thank you guys so much for watching, and hope to see you guys online and see you next week. We're going to close that here. Frozen. There we go.